Looks like Elon Musk gave Tesla some Viagra and excuse me. So I have good morning, master traders and money magnets. It is Sunday morning and I'm so grateful to wake up this morning and have the chance to talk to everybody, to talk to you guys, my fellow sheeps, to talk about what I love, which is this stock market. And you know, it's been a bit tough to trade lately with it being in the chop phase, still trying to figure out what it wants to do. However, we do have some new context. We do have some new context with the SPY gapping below this wedge and retesting the 5 daily moving average once again as a resistant level. Even though it's a green candle, it was a lower close than the previous day, and once again retesting and treating the 5 daily moving average as a resistance. Bearish behavior. Okay. Ever since back in mid-February, the bulls dropped the soap and the bears has been taking advantage, pushing price lower and lower, taking out multiple moving averages. Until this day, SPY is within this down trend line that has had multiple tests as resistance. Okay? So the bulls, well, what they need to do is quite simple. And when I say simple, I don't always mean easy, but it is simple. Take out the 565 level and break out the 566.4 level. That's a fib level and that's the 5 daily moving average. If it does, SPY will be in breakout mode. And all this consolidation, this choppy action, this sideways action we've been having lately could maybe lead to the next leg. And that next leg could be to the upside if we get the breakout. Let's not forget, if we zoom out, we are still in an overall uptrend in the macro level, okay? So to start and to keep the overall bull trend going, they will need to take out this more medium-term downtrend and also recapture the 200 daily moving average. Signs of a bottom is in. Uncle don't want to call bottoms, but I will call out the traps and I will call out the signs of the bottoms. And it would need to take out this downtrend line and need to recapture the 200 daily moving average. And that will be reasons. Not guaranteed it's the bottom, but it will be reasons to call it the bottom. So we want to make decisions when the odds are in our favor. And breaking out those resistance levels will put the odds in the bulls' favor. Okay? Now, to end this chop phase that we've been having and continue the next leg of this overall downtrend we've been having since February, bears really need to take advantage of the defense they've been doing. They've been playing defense of critical resistance levels. But I think, and hopefully this coming up week, they'll start to play some offense. And if they do play some offense, support levels must fail as usual. 563.5, 562. The fib level at 560.8. The buy zone at 559. Tough buy zone down there. If it breaks down, we can head a lot lower. 556.5 would be a target, obviously. That's a fib level, but I'm going to favor we go test previous low from mid-March or even lower than that, which means breaking out 552 and 550 and setting us lower. If the downtrend continues, it wouldn't make sense for that to happen. Okay, guys, so you guys got the bull case and you got the bear case. Remember to trade what's in front of us. Remember to have the right mindset. We don't attract what we want. We attract what we embody. Now, moving on to Triple Q. Now, while SPY is showing signs of more bearishness and trying to end the chop. Triple Q is still closing within the triangle. We did gap down, but it bounced and narrowly avoided a breakdown. Okay, so if we get the breakdown, official breakdown, this coming week, once again, that fib level at 479 must fail. It's been like a magnet, but eventually that magnet's going to weaken and it's going to let go and it's going to be a new magnet. And if we can finally break down 479 without recapturing it, it actually shows some selling pressure. Well, I have 477, 474 or lower in play. There's been a interesting buying pressure around that 472 area as well. So we break those levels down, I would be bearish. Okay, below 479 will be a breakdown of this triangle pattern that I have, and then below 474 and 472 would take out this buy zone and give us lots of reasons to be bearish and send Triple Q back down to the 467, 466 area, or possibly lower. I would favor lower, assuming the trend continues. Okay, now if we get more of a bounce, and we want to call a bottom, a few levels must be captured. Stay above 479. 481, 42.5 are levels, but that 484 and 46 level would be a tough one, a critical area, because that's a fib level and a lot of where we had selling pressure this past week. So if we could take out that selling pressure and turn it into a buy zone, that would be very bullish with 490 or higher in play, guys. All right. Tesla. Wow. What a bounce. Looks like Elon Musk gave Tesla some Viagra and excuse me. So I have resistance at 250 and 252. And then there's this big old candle, this big body red candle is representing the chop. I told you it's a big chop range, guys. But if we already ended bullishly, I'd like to see Tesla get above 254. And I would favor a lot more upside, 260 for the gap fill or higher. All right. Now, if the Viagra wears off and Tesla starts to, shrivel down again, it'll come in the form of support levels breaking down as usual. So 245, 243.7 are levels I'm watching. They break down, we're going to drop down a lot lower. 240, 238.6 fib level. Oh, I think 238. I think it'll drop down to 238. That was like a buy zone around there as well. I'll look at 238, 236, 234.5 or lower in coming, guys. We play it level to level. Swing the runners. Swing the runners, guys. And that's what I have for Tesla. Yeah. Viagra. Speaking of Viagra, NVDA really needs some of that right now because it's just been a chop phase. It had an inside candle. It looked like it was trying to break it down, but once it got to the mother candle's low, it bounced. So still stuck within the chop range, which I have at 115.6 up to 120.5. But I do have my own levels, 115 to 121. That's my chop range, 115 to 121. Anything in between that is noise. But if we want the next leg, the next big leg, I need to see that chop range break with volume, preferably with volume, because with volume, well, there's a lot of participants, right? And preferably with a lot of emotions. People are excited, people are scared, whatever it is. I just need to see that range break. Okay, but from here, we'll play level to level. From here, 117 is support. 119.5 is a fib level resistant with 121 above. Okay, so we got to hold that support, clear those levels, 119.5 and 121. Uncle would be bullish at 123, 124.6 or higher in play. Okay, if we are to be bearish, I'm sure you guys already know what I'm going to say. Okay, you want to look to short when Donald Trump makes a tweet. Oh, wait, that's something else. You want to look to short when 117, 115, and 113 fails, because we do have you know, a gap to fill, okay? Gotta fill that gap porn star style. Like, boom, fill it. Oh, goodness. I had too much coffee this morning, guys. I apologize. When Uncle drink too much coffee, I start saying random things sometimes. So, anyways, that's the chop range. And, yeah, hopefully NVDA will break it down like Degeneration X. Speaking of chop ranges, you guys can see coin has been stuck in. I mean, I have it on the 1 hour. It looks ugly on a 1 hour, but I mean, it just, it's more clear. You know, you can see the chop range more clear on the 1 hour. Usually, I prefer the daily chop, but it is getting tighter. Okay, can't say that about Mia Khalifa, but it is getting tighter. Uh, we have resistance at 192. Okay, you got to clear 192, and it should send us higher up to one. Well, I do have a fib level. These fib levels based on a daily chart, guys. I'm just looking at it on a 1 hour chart, but if we can clear 192, that would break the triangle pattern and should send us to 197.6 ish, maybe up to 200. All right, and if we already, you know, want to go short, I do have support once again at 190, 188, but there's a fib level one at around 185.8, and then bottom of the chop range would be around the 180 area. So, you know, if we already get bearish and get that next leg down, I would need to see 180 fail, 185.8 and 180 fail, guys. All right, so yeah, before I let you go, let's take a look at the VIX. Yeah, there's once again a rejection from right around that 20.8 fib level. This time it actually closed a little bit higher. Friday's closed a little bit lower, excuse me. The Friday's closed a little bit lower than Thursday, which show a little bit more selling strength from the bears. And we did lose 19.5 fib level. So you guys already know you don't want to call a bottom, all right? You don't want to call a bottom unless we recapture some lost levels, all right? 19.5, 20.8. I'd be bullish about 20.8 since that's where we had a lot of selling pressure. And I would stay bears below 19.4.5 since that's where we lost last Friday. All right, guys. I hope you guys enjoyed today's video. You guys have a great rest of your weekend. All right. Stay safe. Happy Sunday. Go to church. Love y'all. Peace.